Okay folks, this is a review for the live trading room on the 20th of April 2020. So really the start of the report, remember these reports are given before the market opens, and the top bit is really just going over a trade which we were managing from last week. So we'd locked in some profit and we were just really closing the trade for that particular trade. So the next part of the report was going on to say that 5800 was very key for the day, and really the price action around this dictated how the market would be flowing for the day. So really what we were saying here is that, look, if we get this 5-minute bar breakup, I'm quite positive on the FTSE. I feel it's going to go a lot higher. Also, I said if that doesn't do it, then look at the 1 hour break on a Monday above a key level, because that's usually very bullish as well and would point to further upside, really up to 6,300, 6,400. So I had this bullish view, but I was making it very clear in the report that we do need the market to confirm that our view on the market is correct. So this is an important learning aspect in trading, is that you can have a view, but the market must confirm to you that your view is correct. So with this type of confirmation, we're just allowing the market to confirm if we're right or wrong without losing any money. So if we didn't get those two trigger buys, we were then looking to buy a sell-off for 170 points. And that's marked against the open price for the day. And that's valid around the clock, which means it's valid 24 hours, i.e. until the next day's session. With a 400 point target and 170 point stop. So the risk reward for that's pretty good. Short-term direction, we're still very negative. Long-term direction, we're positive. Spike down at 25 points, I liked. No closing gap, no swing trade. All right, let's have a look at the price action then. So we opened here. This is the opening price for the market here. So it's 58.20. Now, first thing we need to know is that 170 points below there is 56.50. So one of the trades was connected to a big sell-off of 170 points. Okay, so we'll come back to look at that in a second. But really, if we weren't triggered into our buy trades higher up, that's really what we're looking at. Let me just move this over a little bit more for you. Okay, so opening 5-minute bar. Let's put a marker on the high of that. That's the opening 5-minute bar. So you can quite clearly see that we didn't break the 5-minute bar up for the day. Okay, so no buy trade triggered there. And really, in the live room, we were actually looking. We actually tried to buy 5800 with a very tight stop just below it, a couple of pips below it, looking for a very quick reaction. That was a scalping trade. So scalping trade is basically when you're going in at a very key level in the market, using a very tight stop and trying to get in on a momentum trade, which can be a very lucrative trade. Okay, so then no 5-minute bar. So then we really need to look at the 1 hour chart. You know, what happened on the 1 hour chart? You know, did that trigger? So let's just have a look at that. So where were we? Here we are. So this was the line in the sand. This is the opening 1 hour. This is the first hour trade, and we can see that we came up and we tested it, but we never broke above this line. So the buy trade was never triggered yesterday. The market never confirmed our view to get long in the market. So then the market's come down and we've got a buy all the way down at, we've almost got there actually, 56.50 here. So we'll just need to see if we get down there, but it's got down to, well, it's come within 13 points at the moment, but we've got a trade here valid if we get down there. So we'll be keeping an eye on that one. And the target for that's going to be some 400 points. But of course, we'll make that risk-free, because what I was saying to my pro traders yesterday was that if we get in on any buy trades, we must try and make them risk-free. What do I mean by risk-free is that, just say we moved up 50 points, we may take half profits and move our stop 50 points below our entry, which means that if the market does pull back again and hit our stop, we don't lose anything. And it's prudent to do that when you're trading against the long-term trend, which at the moment the trend is still to the downside. Okay, that's today's, that's yesterday's trading review on the 20th of April. Hopefully you found that useful.